Just look at this. This is ES for the past 120 trading days in line graph form on an hour-by-hour basis. Anyone who thinks that money can be consistently made with this sort of thing is out of their freaking minds. Because this looks like the kind of scrawl that a 6-year-old would do if they were asked to draw what a stock chart looks like. It's just scribble, scribble, scribble. And one thing is almost for sure, which is that there's a lot of very frustrated traders out there, both bull and bear alike. I'm not one of them today, at least. I had a very good day. In fact, my best day in a very long time. Months, many months probably. However, just any portion of this, you can see the amazing effect that government manipulation and meddling is having on our financial markets. And over the coming months and years, as the United States spirals into oblivion, it's going to be really interesting to see what kind of recriminations take place. To say nothing of LinkedIn going to single digits in a year or two. That'll be kind of funny to watch. So this is the tremors of the amazing times we have ahead of us. And you're going to get a front row seat, all for the low, low price of clicking as many ads as you possibly can. That's right. So it was a good day. I came in light. I came into the day completely short, but only 40% invested. Kind of a shame, huh? But that's rational, I think, on my part because of this sort of craziness. Because if you take away today, there's nothing to prevent one from saying that this was going to head to 1360, 1370 or higher. It's just too unpredictable. But it took a little dose of reality, a really crummy jobs report and a really crummy manufacturing report to kind of wake people up to the fact that the economy still sucks in spite of the whitewashing that the people your tax dollars are paying for are performing. So I'm already 2.5 minutes into this. I've just been sitting here yakking. I have a lot of graphs to go over, and I bet I only get to a quarter of them. Let's turn our attention as quickly as we can to a few of these. Get back to a regular bar chart here. So let's just look at a couple of indexes here. Russell. It seems amazing to believe, but it was only a few weeks ago that the Russell was at its highest point in human history ever, ever, ever. That's right. Less than a month ago, the Russell had its highest valuation ever, even before the financial crisis. It's as if things had never been better ever in the business of America. Jesus, what were they thinking? XAU, I think, speaks to the fact that the whole precious metals bonanza is over. It ended back in December, and it's been sort of sputtering along ever since. I think that this, along with just about all other assets, are going to go puking along. As we look at TNX, it's kind of fascinating because we do have all the signals of a deflation approaching. You can see here from June '07 down into the glorious depths of 2008, interest rates just tumbled nonstop. We're starting to see that again now, in spite of old Chrome Dome doing everything he can to create inflation. Deflation is beginning to take hold. Now, looking at the forex markets, which is vital, isn't strong enough a word. I mean, absolutely necessary in this environment. These are important to watch. So the euro was basically the principal driver for me as to why it was a pretty good day out there. It only went down 0.42%, but I felt that the kind of softening we were seeing in the euro was rather illuminating. And if this continues to be weak, and this is my largest short right now, if this continues to be weak, that'll just add fuel to the fire. Not a sure thing by any stretch. This could turn around overnight, absolutely. New Zealand dollar, a more interesting graph, I think, in the fact that it's in spite of reaching a record, again, lifetime, never before seen high it's been turned away from that broken trend line, and I think that's of note. Commodities have been weak. DBC is one of my larger shorts. This is one of the larger positions I actually entered the day with, and I'm continuing to hold on to it. A lot of nice gap fills going on here. Kind of a combination of gap fills plus retracements to broken trend lines. Very nice combination. Precious metals. Crazy, weird, nutty day on precious metals. Gold was up and silver wasn't just down. It was like big time down. It was just crazy looking. I was in and out of silver quite a lot today. I think every single trade was profitable. I mean, it's kind of a shock. But I was bouncing in there like crazy. And I did cover during that wonderful last half-hour plunge. And I have no position in silver right now, I don't think. I've got 80 shorts right now, so sometimes it's hard to keep track. Nope, no silver. No precious metals of any kind, in fact. But yeah, gold was up a little bit, 0.18%. And silver got wackadoodled here, down about 5%. Yesterday, I did point out, it was my putting my big boy pants on, I did point out silver as a really promising short. I think this may continue to be a great short, right down into the mid-20s. But there'll be a lot of bouncing up and down, and I just wasn't comfortable with that big a sell-off at the end, hanging on to it. I was very happy to take my my profits. GDX, which I bring up a lot, I actually have kind of lost interest in for the moment. This is the miners. It was down almost 2% today. I will say that should it break this trend line, which won't take much, in other words, should it take out today's lows, this could get interesting. I think GDX might well be on its way down into the low 40s in the coming months. Should things unfold as I'm thinking they will. XLE is an ETF I wanted to point out. This is energy. And as we zoom into this, you can see the makings of a very handsome topping pattern, which has not completed yet. But should it fall beneath, let's make this more conservative, should it fall beneath the low of May 17, I think that this XLE item could be in for a pretty handsome swoon down to maybe the low 60s. So worth watching. Nice drop today on that. My shorts have been rather oil / energy / commodity oriented, not by design. I go from chart to chart. I mean, I'll short buggy whips or kitty litter or anything. It's just a chart to me. But when it's all done, it just so happened that it tended to be a concentration there. I cannot make out my scrawly writing here. I don't recognize that symbol. Oh, it's XLI. XLI, also interesting one. This one, a very sharply ascending trend line, which was broken, hello, zoom, quite cleanly. Actually, not cleanly at all, but yeah, it was broken May 17, kind of worked its way up again, down, up, down, up. But the violation of this trend line is very much intact. I don't have a position in this right now, but I think this is an example of the kind of broken trend line that makes the coming months, or at least the coming weeks, promising for us bearish types. And I just noticed kind of a sort of a head and shoulders pattern on it right there, not a terribly bad one, that I just drew a horizontal line for right there. So nothing sensational here, but I think it would be quite easy for this to get down to, 34.5, 34, something like that, within a matter of days. So I'll close by saying, sorry to obsess over these guys, but the fact that a website like Airbnb, which has got to be one of the worst names I've ever heard, has attracted venture capital at a $1 billion valuation is just astonishing and a great marker for that we're in Internet Bubble 2.0 here, and I just cannot believe people are doing this again. Ugh. Anyway, good on them, I suppose. You can sucker VCs out of that much money. God bless. That's it from me. May the force be with you.